and Loan Girl, CEO and founder of Passion and Purpose Realty Group.
And I'm LaShonda, the luxury home real estate agent, brokered by eXp Realty, and owner of the Empire Realty Group.
And we are Sisters in Real Estate.
Hey, y'all.
Oh, yes.
We are officially recording season 2. We're recording now our season 2, episode 1. And we're so excited to be here.
Yes,
I am LaShonda, the Realtor.
Hey, and I am Nikita Jacobs, your home and loan girl. And we have a special guest.
Amy Martinez, your credit specialist.
Let's go. So really excited to do this, to be back for season 2. And just really quick, I'll just start off from the top of, before we get into market stats, just to kind of share with you guys what we're going to be doing in season 2. We're definitely going to have special guests like Amy on board to share the knowledge that they have. They're the professionals, they're the experts in their field. So we're definitely going to be bringing some of them on. So you're not just hearing from a realtor and a lender's perspective. We're also going to be spotlighting small businesses, big businesses, businesses that are growing to make everyone aware of what's going on in DFW. So if you know anybody, or if you have a small business or a business that you're starting, please feel free to reach out to us here on YouTube, or you can find us on our Facebook platform, or if you have our direct line, you can definitely text or email us, and we'll be happy to reach out and to see how we can, partner together and have you guys on, or at least feature your business on our podcast.
Yes, I'm so excited. Like, we are here at season 2, and we're making things happen. I'm loving all that we're doing. All things real estate, we're bringing it to you. We're bringing what you need to do in order to start your home buying process. You need to tune in to Sisters in Real Estate, because we out here giving it to you. Okay.
That's right.
And I'm excited about it.
I want to start off, of course, with our market stats. I don't want to tarry. Definitely want to make sure you guys are aware. We are going into our spring and summer months of real estate, which are the busiest months of real estate. You got people their tax returns. They have, they're ready to get ready for the summertime, and kids are graduating from school. Different reasons people will be selling and buying. And I just want to make sure that you guys are educated, and we want to make sure you understand what you're getting into whenever you do decide to buy or sell. Right now, this market it's crazy. It's unheard of. It's foreign for a lot of us. Because it's not buyer, it's not seller. It's kind of like a weird in-between kind of thing, because at certain price points, you have people that are still experiencing multiple offer situations, even offering over asking. A lot of sellers are not really bending over to give concessions, without like a really strong offer. So just make sure that you are prepared to go in with a very knowledgeable, reputable realtor to negotiate on your behalf, and a lender who has all the tools and products available to make your financing as strong as it can possibly be, because it's just not cut and dry. It's not a simple, I want to spend this and that's it. There's no question. Right. There's going to be some give and take.
I totally agree. This market it's a good market too, depending on where you are and kind of where, where you're looking at. So really location is key, and price point is key, because there are areas where there are multiple offers being submitted, and people are putting over asking price. One of those places is Frisco. I've been noticing a lot of that been happening, where they're still kind of doing those things. We do have the ability. We have a lender that does some cash offers. So if you are experiencing that, maybe we need to look into seeing if you could qualify to be able to get that upfront cash offer. So that way, that might be a better competitive contract for you. So knowing who your team is, your realtor and your lender, is very, very important. Them working together and meshing together is key to the success of your transaction and the purchase of your home. So be cognizant of who you're choosing and who you're selecting, because you got the best in front of you. Okay.
Yeah, it's a really crazy market. Like you definitely got to go in prepared mentally, financially, and just have all of your ducks in a row, because these houses aren't sitting on the market that long anymore. Like I said, people are making multiple offers, and some people aren't even notifying everybody that we have multiple offers. They're like, oh, we got multiple offers, and they're just accepting one of the ones that they already have. But I just can't stress enough how important it is to make sure that your team is as strong as possibly can be, because this market is definitely crazy.
Yeah, I think, what you said earlier, how people are waiting for whatever reason. They wait and a year goes by and it's not the right time, and they wait and another year goes by. And we were talking how why pay somebody else's rent when you can be paying your own mortgage right now. So
come on.
Yep.
Because you're paying their mortgage.
You're waiting for the interest rates to go down. But right now, when you're renting, you're literally paying 100% because you're not seeing a return on any of that money other than the fact that you have a roof over your head. So you're paying somebody else's mortgage at 100%, plus they're putting some in their pocket. And you're waiting for the rates to go down. But when the rates go down, the house prices go up. So there isn't a down rates down house price. It's a teeter-totter, like you said, Nikita. It's kind of like a balancing act. If you want a lower interest rate, then you're going to probably pay more for the house. If you want, a cheaper house or a less expensive house, then you're probably going to pay more in interest. When what I say to people is marry the house and date the rate, because the rate you can change, but you can't change how much you spent on that house.
Correct. Mm-hmm. And that's very true. You definitely hit it on the nose. Waiting around is not always the best, and trying to get to that perfect market. We don't know how the market is going to be. It changes. It's forever changing. And so once you get your house, once it changes or it goes down, you have the option to be able to refinance into something lower, and be able to take advantage of the rates at that time. So don't do yourself a disservice by be like, oh, okay, I'll wait another year. Start now. Mm-hmm. Buy now. That's what most people say. Buy real estate now. Don't wait to buy real estate and wait. Like that's the key right there. And that's because real estate appreciates, and so if you're buying the real estate now, you can sell it later on. One thing I want to make sure I talk about, and I'm glad that we're touching on it, is think about long term. Think about long term. Today, you may be paying a little bit in your mortgage payment, but as you see, rent is continuously increasing. So by the time, in 10 years, you're going to see your mortgage, people are going to surpass that in rent. Okay. Let's be clear. And you've been smart enough to buy now instead of waiting for later, so I love that I bought when it was time for me to buy. And I'm going to continue to buy because it holds true that it is equity. You get to leave something to your friends and family. But one thing I always hear too, and I'm glad that it's bringing to me, is that people are afraid. They're afraid because they feel like they may not be able to afford it. It's the 30-year commitment. Who knows? I may lose my job next year. I may lose my job here. I don't know, But what I always tell people, if you rent, they're going to put you out ASAP if you don't pay that rent.
ASAP. They're going to kick you out. They are going to go to the court, get that paper signed, and you're out in 30 days, if not less.
Late charges. You're going to have all types of stuff added to that. Whereas a mortgage company, they don't win by putting you out.
Right.
They win by working something out with you.
Right.
So if you're going through a hard time or hardship, it may not be forever. And you'll be able to work something out with them. And if you can't, you can at least sell that property and make a little money off of that and find you something else, So always think about the long-term, solution, and so anyway, that's a little information that I kind of went off topic a little bit, but staying on topic.
Yeah, it's true though. You said that rent is going to surpass mortgage. It already has. My friends that are paying rent, their rent's more than my mortgage.
Yeah.
And I mean, it is the way it is right now. And I thought, invest in something. Put that money into something you own. Do that now.
That's really good. And that's coming from your credit person. So if she's seeing it, hey, it's out there. So let's not hold her hostage any longer. Can you go ahead and introduce this amazing woman, Nikita?
Yes, I can. Listen, Amy Martinez is hands down one of the best credit solutions person I know, agent I know. Honestly, her team, they have a wonderful infrastructure that will update you. They have a well-oiled machine that has different processes where they keep you updated on where you're at with the status. Honestly, she's my go-to person. I will scream her praises and the team praises from the mountaintop. But you have to invest the time, and you have to make sure that you're working together to make it happen. So without further ado, honestly, I want to introduce Amy Martinez with Rising Point Solutions, and she's here to create or talk about some solutions to your credit challenges. So there we go.
Yay. Thanks, Nikita.
Absolutely.
So I'm here. I just want to give you some tips and some tools that you can all use so your credit's not going to be the part that's holding you back from buying your dream house. Okay.
Come on.
There are things that you can do to prepare yourself and make yourself, approval worthy to get a home loan. So credit's no joke, people. It doesn't have to be scary. It doesn't have to be foreign. I'm going to teach you enough to get by and help yourself, but I'm going to also share my information so I can be a resource to you to help you, set up a game plan and get to where you need to be. But just a few things right off the bat. There's about 3 major categories that make up the majority of your credit score. So number 1, the different types of credit that you have. So if you don't have an installment account already, you need to open one. You want to have at least one installment account. An example of that would be an auto loan. Student loans would be installment accounts. If you finance any furniture from a store, that's an installment account. In addition to that, you want to have at least 2 credit cards. People always ask me all the time, what's the ideal number of credit cards to carry? You can carry as many as you want, but it's the balances that matter on those credit cards. But ideally, you want to have a minimum of 2 credit cards. So if you don't have that, get one, add yourself as an authorized user to a family member's card, whatever you need to do, but you want the 2 accounts. The next thing that makes up about 30% of your score is going to be your credit card balances. So you want to try to keep your credit card balances below 20%. So for example, you have a $500 limit on your credit card. 20% of that would be $100. So you want to try to keep your balances below $100 on that card at all times. And this is especially important when you're going to get your credit pulled when you're getting a home loan. You want to make sure you have those balances paid down before you pull your credit, because that does make a big impact on your credit score. The last thing that makes up the majority of your credit score is going to be your payment history. So what I mean by that is going to be any late payments you may have, any collections on your credit, any charge-off accounts, repossessions, bankruptcies, anything negative on your credit report does make up the majority of your score. It's about 35% of your credit score. So what can we do? Number 1, like I said, just make sure you have that minimum open trade line, 1 installment, 2 credit cards. Make sure your credit card balances are below 20%. And with all the negative history, a lot of times time will heal that. Late payments especially. Did you know how much a late payment can affect your credit score?
I would say like a whole bunch of points, like 30 or 40 points.
Yeah, it's 50 to 100 points. That's 1 30-day late payment. So that's no joke. So the number 1 thing I would tell people today is keep your payments on time. Make sure your payments are on time. That's a big deal changer when it comes to your credit score. And then the credit card balances. Those 2 things are key for your credit. If you don't have open credit, it's easy to do. There's plenty of resources out there. Our website, Rising Point Solutions, is a great resource for that as well. Another thing I wanted to touch on is identity theft. That's a big, it plays a big part in credit identity, fraud. It ruins people's credit, basically. I've had plenty of customers come to me. They had no idea their credit was compromised until they went to try to make a purchase, and they ran their credit and found out that somebody was using their identity to set up other accounts. Wow. And these accounts go into default. It ruins their credit. It is a serious problem affecting billions of people out there today. So what I can tell you is just do everything you can to protect yourself. Be careful with your passwords, change your passwords, keep your personal information, within to yourself. Don't leave it laying around. Don't carry your social security card. Check your bank statements regularly. And on top of that, your credit. Check your credit as often as possible. They say twice a year. I say once a month. Make sure there's no activity on there that you're not aware of. That's a red flag. is if there's unknown charges to your account, any open new accounts that you didn't open, just be on top of that. I mean, that can help you and save you hours and years and days of time, rather than trying to, resolve that after the fact. If you can prevent it, that's the best thing to do. I know we had some good questions too, Shonda. Yeah. You want to ask them? I'm sure other people have the same.
A couple of misconceptions are the rule about keeping the balance low. So below 20%. I know you touched on that. Is it below 20% of each individual card account, or 20% below within combined?
That's a great question. So it's actually the aggregate total of all your credit cards combined. So whatever the credit limits add up to and whatever all the total balances add up to, whatever that percentage is, that's what your utilization rate is. Okay. So ideally, you don't want to have any particular cards maxed out, but if you're at 50% on one and others are paid off, that aggregate total, as long as it's below 20%, that's what determines your utilization rate. And that's what determines your credit score. Okay. So that's a great question.
Another one I had is, so if they're using Experian Boost, does that help their score, or what does that do for their credit score?
Okay, so Experian Boost is an installment account. So that will show up if they already have an installment account. It's not going to do a whole lot for their credit. So if they have an auto loan already reporting, then it's really not going to help them much. If they don't have any, it will help Experian only. You have 3 credit bureaus. You have Experian, TransUnion, and Equifax. So all 3 of those scores matter because it's your middle score that determines what Nikita's going to use to determine what interest rate you get, or if you get qualified or not. So Experian Boost does help Experian, but only if you don't already have an installment account established.
Okay. Good to know. Good to know.
So,
the next question is, how do the points, how do they determine when you get points, or how the points are, dispersed out? Like, is there a certain day or time, or is that dependent on your card issuer?
Oh yeah. So you're talking about the reporting cycle. So when creditors actually report to the credit bureaus, that's what, that's what determines your score, is where your balance is at that time. So for example, your due date on your statement for your credit card shows that you're due on the 15th. So you make your payment on time on the 14th, but the creditor reports that balance to the credit bureaus on the 5th of every month. So whatever your balance was on the 5th is going to show up on your credit report. So that's going to factor into your credit score. So what I tell everybody is, when you're shopping for a home, you want to either find out when that reporting date is, or just keep your balances less than 20% at all times, so you don't have to worry about it. Because that does, I have a lot of customers say, well, I max my card out, but I pay it off every month, so it's not a problem. Well, it may not be, but it is if you're reporting 100% utilization on your credit card every time it reports. Right. So the key is to get that payment in before the reporting date of that creditor, so that updates the information on your credit report and makes it current.
And they can get that date from their credit card issuer. They can
call them and ask them the reporting date, and they will tell them. So if they want to make sure that they get their payments in before that date, they can know what that reporting date is.
Okay. And I think the last question that's really important is, what's the best tool to use to keep up with your credit and what's on there?
Yeah. So there's a lot of monitoring sites available, and a lot of people are afraid to check their credit just for whatever reason. They just don't want to know what their score is, or they just don't know where to go, or they don't want to affect their score by pulling their credit. If you go to a consumer site, it's considered a soft pull, so it's not going to affect your credit score when you look at it. The best one and the most accurate one to use is going to be myfico.com. That's MYFICO. They're the most widely used. They go on the FICO scoring system. They break down your credit scores per industry. So when you go to Nikita for a home loan, you can look at your mortgage score through myFICO, and she's going to pull that same number. So a lot of times people will check it through Credit Karma, not realizing that they don't even use the FICO scoring system. The FICO scoring system is the most widely used in America. So when you're looking at a Vantage score, they have different algorithms, different formulas that make up these credit scores. So when you think your score might be a 620 and you're thinking that's pretty good, but then Nikita goes and tells you, I'm sorry, it's a 560. Don't shoot the messenger. It's not her fault. It's because of the site you're looking at. So
I've had people really get mad at me. I'm like, listen,
don't get mad. It's not her fault. She's just relaying the
what system are you using?
I thought that was my last question, but you brought up something that I really do have a question about, and that's how do you build a mortgage score if you don't have a mortgage?
So all your other scores are going to factor into one credit score. So it does break down. You don't have to have a mortgage, but to what I learned over the years, I've been doing this for 12 years now, but you have to have a mortgage to have a perfect credit score. A perfect credit score is an 850. And without a mortgage, you can't have an 850. So I just learned that there's different things, but it's not necessary to have an excellent credit score. You could still have an 830 or whatever. But yeah, that's a great question because your credit score is a compilation of all your scores combined. They just kind of give an average number, and then it's that middle score. So on my FICO, though, if you don't have a mortgage, you could still have a good mortgage score because there's different factors that they fit into that criteria. So,
so it's not like a mortgage score is what they use to be able to calculate the score to determine if we'll give you a home loan. Like we'll give you
okay. So for example, if you're shopping for a home and you were late on your rent, 12 months ago, or, anything to do with that, it's going to have a bigger impact on your mortgage score than it may on your credit card score. You might have perfect payment history on your credit cards and your credit card score might be higher. So, but if you don't have a mortgage, they'll take other things in, similar categories that make up your mortgage score. So,
yeah.
But so the takeaway from this is keep all your payments on time. If you keep your payments current, that's the biggest deal breaker with your credit score is a 30-day late payment. So keep your payments on time. Another thing, if you're going to buy a home, please don't go shopping for a car right before Nikita goes to pull your credit or right when you're in underwriting or anything. Don't make any large purchases. This is not the time to go furnish your house. Just wait, get approved for your home loan, get into your house, and then do whatever you need to do.
Yeah, but if you get a new house, just lay on the floor for a little while. Get you an air mattress.
Yeah, right. The important thing is to get your house.
Yep. You got to make those sacrifices. That's what I say. You got to invest in yourself, make the sacrifices long enough to get in the house. Once you're in the house, you go spend however much money you want to spend on that new real wood cherry oak furniture that you want to buy and that $10,000 refrigerator.
For real.
And then you don't have to move it again. It can stay there. That's your house.
Exactly.
That's your house.
Well, we appreciate you, Amy. This was really some great information. I really hope you guys got something out of this because I know a lot of people do have credit questions. And some of you, you don't know what to ask, but we've hit on some really important, hot questions that I've heard people ask. Now, I know we didn't get into the weeds about deeper and more, deep credit stuff, but, you can reach out to Amy and have those questions on a sidebar with her. But just high level overview, I think this was great. I think you definitely touched on some important stuff. We're giving some good stuff in season 2. We're coming out swinging.
In season 2, we coming out swinging. We want to give you all the information you can, so that way you are educated. And by the time you get to us, you already know what you need to know. You've done what you need to do. We would just be kind of like confirming it. Yes, you did great on your credit score. It looks like you've improved it. But this is stuff before you even come to us. You kind of need to know where your credit score is. You need to know what your budget is. You need to know certain things so that way you can be better equipped when it's time, especially, and what I love is ones that come to me, they were like, yeah, I did such and such, this and this and that. And then when I'm pulling, it's like, great, pre-approved, go, and so that's how you want to do it, so that way you can, don't be afraid of your credit score.
No.
We know things have happened to really great people. That doesn't mean anything. Okay.
Right.
That just
it's fixable.
Yeah, it's fixable. Credit is fixable. You just got to work at it. So
I'm
don't
telling
be
you, this segment probably taught more people more than they've known in their whole life in this little segment here because people don't teach you about credit.
No.
So
it definitely should be in the schools. I say that, and I don't know what I need to do, but it should definitely be in the schools. So when these kids get out, they're not just going by and getting credit cards just because they're 18 and 19. Like they need to know how to responsibly, build and take care of their credit for real.
Agreed, especially if their parents don't really know, you know what I mean? Because you're educating them now is important. So that way they might be able to teach their parents if they need to. But I know I was teaching as I learned, I taught my son, and so that's how it has to go. You have to be able to reach one and teach one, and so that's the whole purpose and the reason that me and Shonda have even started this podcast, because we really want to make sure people know that we're invested. You can get a home, whether you can get one now or later. It doesn't matter when you get it, as long as you get one and you're working towards that goal. But knowing your credit score is key, and kind of coming and calling people like, I don't know what my score is. That's not okay. You need to know where your score is, even if you did check Credit Karma. So you know what? I checked Credit Karma, and that's where I'm at. At least you tried to do something.
You tried to look. And
the sooner you know, the better, because if you're getting a house in 6 months and your credit's not there, that 6 months can be the game changer. You can get there in that time frame.
That's true. Agreed. And I've put together a home buying guide that's free that helps you understand what to expect once you do get that pre-approval and you're ready to buy. So even after you've done all this homework and you've worked hard at getting your credit where it needs to be, there is still help and education and accountability where I'm giving you something to say, just look at this, and this is what you can expect. So we'll put the link in the bio for that. But we want to make sure that you guys continue to empower each other,
embrace your true self,
and evolve on your journey. Thank you guys for watching again.
Thank y'all so much. We appreciate y'all so much. Thank you, Amy, for coming on.